You didn't expect this. I didn't expect this. Charles Hoskinson is gone looking for aliens. And at the same time, the Cardano DeFi ecosystem is growing quite steadily and nicely. Here, look at this chart. This is Cardano's total value locked on-chain measured in ADA tokens. More and more ADA tokens are being deployed on the various DeFi protocols, and they are growing. 82% for Optim Finance, 49.8% for Muesli Swap. And so when you look at the total value locked of those apps, these are very impressive trends. Optim over here, Muesli Swap over here. And so Optim is a yield product to borrow and lend Cardano delegation rights via liquidity bonds. Muesli Swap is a simple decentralized exchange. Now this all looks rosy and the US dollar price of Cardano tends to creep up. That being said, relative to Bitcoin and Ethereum, unfortunately it's not doing too great. This is Cardano relative to Bitcoin in the last 2 years on a very constant downward trend. From the top in September of 2021 to today, Cardano lost versus Bitcoin 82%. This is Cardano relative to ETH, not that different. Here the loss is 81% roughly. When we zoom out a little bit, we can see there is somewhat of a sideways trading range, but we did break below the support recently. So this is ADA versus ETH. This is ADA versus Bitcoin. And this is ADA dominance. So how much of all of cryptocurrencies market cap is in Cardano? Currently at a bit under 1%. Now, where does this disconnect come from? There is growth in the DeFi ecosystem, but apparently the price relative to Bitcoin and Ethereum isn't doing that well. I think it has to do with two things. The first one being that Cardano is already relatively expensive to its value locked, even with that growing adoption. So when we look at the different DeFi chains and we look at the total value locked relative to the market cap, so that's here on the right, we can still see that Cardano is roughly 60 times its total value locked, which is way larger than the competition, right? Ethereum has only 9 times its market cap relative to TVL. The Binance Smart Chain is at 11. Optimism is at 1. Avalanche is at 7. And here we go with Cardano at 60. So that's the first reason. Cardano's DeFi system relative to its market cap is still quite large. And thus one could argue that we still have to grow quite a bit in the TVL in order to see some pressure from DeFi on the ADA price. The second reason for this underperformance could be simply momentum. A lot of people have bought ADA around the $2 to $3 range, and now we are at 30 cents. And people simply just want to get out. There's a way to quantify momentum and to time those waves. I do backtest simulations of buying and selling cryptocurrencies regularly on this channel. And one very straightforward way to time the market is to simply use moving averages. To buy whenever the price is above the moving average and to sell whenever the price is below. And this here is simply just as an example, the 200-day simple moving average. But when you follow a strategy like this, it's always the question, what's the best duration? Should we take the 200-day or maybe the 150-day? Or maybe the 100-day. What's the best moving average when we try to time the market like this? Because on the one hand, we want to change positions very quickly whenever momentum turns around. But on the other hand, we also don't want to have a lot of those failed signals where we buy high and sell low and we get these fake outs. And so with a backtest, with a simulation of buying and selling, we can find out, historically at least, what was the best moving average for Cardano. We can do that for the simple moving average. We can also do that for the exponential moving average. And so I have run the backtest. I have backtested all the moving averages from the 2-day up to the 200-day. And I've done this for the SMA, the simple moving average, and the EMA, the exponential moving average. So in total, we are looking at almost 400 backtests. So the data I've used started in 2017, 1st of October 2017, and it went to the end of July of this year. And we start with $1,000. We've got a fee whenever we get in and out of the asset of 0.2%. No gas fee for this simulation. And then you let the macro of the Excel sheet do its magic and calculate those moving average trading performances. And then we can see two things. First of all, what's the best moving average? But secondly, also, how well in general does this work? How much is the end result depending on what duration we pick for this trading strategy? Would a 50-day work as well as a 100-day? How does it compare to just buying and holding? So the backtest does take a while because we've got quite a bit of data to simulate here. But after roughly 1 minute, this is done. So here we go. We've got the result. Buying and holding over the time would have given us 3%. That's because we start the trading after 200 days in order to have the same time window that we're trading in. So the trading simulation started on the 18th of April 2018 at a price of 26 cents, and now we are at 31 cents, which is over the years annualized 3% per annum. And here we see the trading performance results. And note how we've got very bad trading results in the very short durations. And that's because of the trading fees, right? When we do too much in and out, then we burn a lot of money with just trading in. But when we go longer in the duration here, we see that both the simple moving average and the exponential moving average tend to outperform buying and holding quite a bit. And so this is the result in chart form. On the x-axis, we've got the duration. So from the 2-day SMA and EMA all the way to the 200-day. In turquoise is the SMA annualized performance, in red is the EMA annualized performance. And so we can cherry pick what's the best duration. For the simple moving average, it's the 138-day. And for the exponential moving average, it's the 38-day. Now, I like this strategy so much because first of all, we can find out what are the best durations. But secondly, it doesn't even matter too much what kind of a duration you take here. Trading the momentum tends to outperform just buying and holding. So of course, it's good to know the best duration, but it's not necessarily required. You could simply just trade Cardano with the 100-day SMA or EMA. You would still outperform buying and holding massively. I also like that the strategy tends to work across many different altcoins, not just Cardano. Most altcoins run in those massive cycles. And so let's look at this over time, the 138-day SMA. So we enter this in the Excel sheet and we plot the chart. This is how that looks like. In white, we see the Cardano price barely visible on this chart. In turquoise, we see the performance using the strategy. There is some volatility here, but overall a very nice outperformance. This is on a linear scale, so we can't really see what happened here in the early days. Let's look at this on a logarithmic scale. So that's over here. And here we can really see how nicely and constantly we are making money with this strategy, right? Cardano can go down 90% easily, but we short during this time. We bet on falling prices during this time. We outperform nicely. So what we want to do with the chart is we want to plot the 138-day simple moving average, which is over here. And we want to bet on falling prices. We want to short Cardano whenever the price is below. And we want to bet on rising prices whenever the price is above. And see, historically, this timed the market very, very nicely. Now let's also look at the EMA. And here we see we have already crossed the EMA. So we are somewhat in a neutral area right now. Once the price goes above 34.7 cents or so, we could be bullish again. Currently, only according to the EMA, we are bullish, but according to the SMA, we are bearish. Historically, though, the SMA created slightly better signals than the EMA. So in sum, the momentum is still against Cardano, despite the nice development of the total value locked of its ecosystem, right? There's more and more ADA tokens that are being locked in those different applications. So I don't buy ADA just yet. Momentum hasn't yet clearly turned bullish, but I am continuing to watch it very closely. And of course, I'll make another video once that moving average has been crossed again. Now, this is one of many backtests I've done over the years. Backtests on different trading approaches, backtests on different assets. And that's, I think, what makes this channel different from others. We only use approaches that historically worked well. And even though past performance is no guarantee for future performance, I think it's the next best thing that we have. We simply work with the assumption that psychology doesn't change too much over time. When people are down 80%, they're likely going to react very similar, no matter if this was in 2016 or in 2019 or in 2022. If an altcoin suddenly has a spike in attention, Does it make sense to buy? And if yes, under what circumstances? Those kinds of structures don't necessarily change with time. And so we've done all kinds of backtests, and you can download all of those Excel sheets for the different backtests in the premium membership. There are also tutorials specifically for backtesting. How to build such a sheet, how to change such a sheet. All of this is very valuable content, and it is a proven approach that helps to ride those positive waves whenever we are in a bull market, and that helps to protect us whenever we are crashing down. Now, there's more information around the premium membership at thebitcoinstrader.com, a dedicated video on this. And the price isn't that cheap. It's $75 per month. But here's the deal. If you are not happy with the content, if you're not happy with the support in the Telegram channels, if you don't think that you get enough alpha out of this content, then simply message me in the very first week and I'll refund you 100%. So there's zero risk for you. Most people that sign up, they stay signed up because they get more money out of it than they spend. But feel free to simply just try it out yourself. You can watch all the videos, you can download all the Excel sheets. The reason why most people stay subscribed is because of the community. It's because the trading opportunities we share with one another, and it's those opportunities and the timing of those opportunities that make us win over the long run. So check it out. It's thebitcoinstrader.com, 100% risk-free for you. I don't know a reason why you wouldn't try it out.